Hello everyone, this is CryptoCruz in my new bubble once again with CoinFinancial. So, good morning, good afternoon, good evening, wherever you may be, and whenever you may be watching this. So, I know I have been missing in action and I truly apologize, but I am back. I'm back and I'm here now to talk about some technical analysis on the price action of Bitcoin. So if you like this content, please hit the like button, subscribe to my channel, and also don't forget to hit that notification bell so you can be up to date with the latest video uploads that I will do in the future. And yes, I am back and I will start uploading regularly again on these price updates and also crypto news and strategies. All right. And again, I apologize. I have been MIA for a while, but I'm back. All right. So let's get on with the chart. This is the weekly chart of Bitcoin. Yes, this is long term. I want to talk about this and then we'll zoom in later on. And also talk about some more, long term. So what we have here, this chart actually dates all the way back to 2019, May of 2019, but we're going to look at this double top right here. Everybody knows about the double top. And then when we started going down, we made this green, two green lines that I drew here. This was the bear flag that I talked about previously in the past. That was like around what, March of 2022 this year. So unfortunately we did break down to the downside, but again, there was a high probability that we were going to break to the downside because that was a bear flag or a rising wedge, right? Again, there are no certainties in trading and investing. There are only probabilities, and that there was a more highly probability that we would break to the downside, and that's what happened, right? I mean, that could have broken to the upside, and we would have probably continued all the way up to 80K to 90K, right? Or even 100K. But unfortunately, that didn't happen. So now we are still, yes, we are still in a bear market. And good news is I do see a Wyckoff accumulation pattern happening here, right? First, let's talk about this. The two white line that I drew here recently, I actually started following this white line somewhere around July, right? I drew this white line somewhere around July and I've been following it. I have to change it a little bit, but here, look. This two white line here is actually a falling wedge. Falling wedge is usually what? A bullish signal. And this is on the weekly candle, so this is major. This is a huge falling wedge on a bullish signal, meaning has a higher probability of breaking to the upside. I know this is not a popular topic that I'm gonna say, that I believe maybe we have bottomed out, right? I truly believe we have bottomed. The bottom is in, but that's not popular right now because everyone is calling for 13K. Now there is a probability, a slight probability that we could hit 13K, but we have a higher chance of actually breaking to the upside on this. One, again, this is a falling wedge, which is a bullish signal. And if we actually zoom in, let's go zoom in, let's say to the 4-hour, much closer. Each of these candles represents 4 hours of price action. As you can see, that white line that I drew, that is a strong support resistant level. You see how we broke out and we crawled, broke back down, then we crawled up and we couldn't break. We went back down and we kept crawling down, and then we broke up out of it, and then we went back down to retest it, and sure enough, here's where we are. The Bollinger Band is telling me that there's a high probability that we're gonna go down again and retest that right there. Okay, there's a high probability that we are gonna go down again and retest that level. Okay, and that's gonna be right around 17,000, right? Now, when I said the bottom is in, when we crashed down a few months ago, right? When we broke that bear flag, we went all the way down to around 17,000. When I say bottom is in, I meant the bottom is at around 17,000. Now, I didn't say that we can't retest that level, right? So there's actually a high probability we could test the 17,000 level again, but there's, I'm betting that that is the bottom and we could bounce back up, right? Another scenario that I saw, let's go back to the weekly. Another scenario that I saw, since this line I drew a few, like back in July, I have to, we could actually change that a little bit because there's a lot of stuff that price action wise, there's a lot of stuff that happened, and we can actually redraw that to make it go up here instead. Nope, hold on, come on, there, go up there instead, because that's one. No, I actually accidentally moved it. I'm so sorry. That's actually one touch point, 2, 3, 4 touch points, right? So we can argue that that is the resistant line right there. So I actually like this better now that we're reanalyzing everything. What we need to do now is actually break this level break this level and close above this level on a weekly candle to ensure that yes, we have been, we've gone out and we can actually continue this Wyckoff accumulation pattern that I saw, and I mentioned that earlier. Now we're going to talk about that. What I see here, back here, was a Wyckoff accumulation pattern that happened, right? And similar pattern is playing out here. Okay, again, we could still go a little bit down before we go up, down to around 17,000 level before we go up. But if we do go up, I'm gonna draw this right here. Where's my brush? Okay, you see this Wyckoff accumulation pattern right there, and then we went up and then down, right? We're doing the same thing here, and then we can go up to around 30K right here, and then down before we can creating a bull flag before we head back up, right? That's right there to right there. What we need to do is break that white line, right? So that's what I see. Okay, so let me erase that. There. So let's just keep watching that. Let's zoom in to see where we're at. Again, look at that. It's not looking too good because we are about to go back down. Hopefully we bounce from that bottom of 17K and then go up, retest it, and hopefully break through it. Okay, now we're gonna look at a more, as you can say, macro level, long-term BLX Brave New Liquid Index. Here's what I'm seeing also, right? Another indicator that we have bottomed, okay? One, I'm seeing a bullish divergence here, right? We're seeing somewhat of a sideways movement here. This is the weekly, but the RSI is going up. We made a low and a higher low. So that is actually somewhat of a bullish divergence. And if we zoom in a little bit more, okay, if we zoom in a little bit more, the Bollinger is looking very bearish. All right, the Bollinger is looking very bearish, but that is the only indication that we could go to 13K, right? That's the only indication that I see. Again, all the indicators is pointing that we have bottom. A lot more indicators is pointing that we have bottom versus the ones pointing that we're gonna go down to 13K. And it outweighs it, right? So this is the only thing I see. The Bollinger is being bearish, looking like we're gonna go to 13K, but the RSI has a bullish divergence also on the daily. We have a low, a higher low, and a higher low. Over here we have a low, a lower low, and a lower low. That is actually a bullish divergence. So hopefully this is somewhat of a fake out, and then we go up. Okay, so, and another indication that we have bottomed is the 3-day death cross, right? So here's what I'm gonna do. I'm gonna zoom out, right? And I'm gonna take out all these indicators because we're gonna look at the MA. We're gonna look at the 200 moving average and the 100 moving average on the 3-day chart. Okay. All right, 100. All right. So what I see here, we are just stating the facts in the chart and what's happened in the past. All right. So if we go back all the way back to the very beginning, we can even try to zoom out. This is dating back to 2010, August 2010. Okay. And then our 100-day is the blue line, and our 200-day moving average is the red line. Okay. Now, one of the first bear markets that we saw was back here in 2012. And then when that death cross happened, when the blue line crossed under the red line, it indicated the bottom is in. And guess what happened? They call it a death cross, but really it's kind of a lag, because it's in the past it always indicated that the bottom is in, right? Doesn't necessarily mean that we're gonna go up right away, but it just means that it's a great buying time, because that is the closer to the bottom than we are to the top. And then if you buy there, is great opportunity to accumulate, because we will gradually go up from there according to the charts. Okay, so right here, when the death cross happened, it indicated the bottom is in, and then look what happened. Price just kept going up, skyrocketing, right? And it's crazy. That bull market only went from, Bitcoin was at what, less than $10 all the way to $260. Can you imagine buying at that price? But let's keep going. It still kept going until we hit the next bear market. This was the next bear market, right? It went all the way down, and that is huge, because it went from around almost $1,200, $1,200, all the way back down to less than 300. So don't panic, because this is just another cycle that we're seeing, right? We're just in another bear market before the next bull run. So let's keep going and look what happens here. When the blue line, the 100 MA, crossed the red line at around $227 price, it indicated that the bottom is in. Now, it didn't automatically go parabolic up, but look what happened. It never went any lower, right? Okay, so it did go no, because the bottom was right here at 174, crossed right here, so the bottom was in. It just went sideways, and guess what happened? We went up again. So if you would have bought right around here when you saw the death cross, if you would have accumulated here, boy, gains. And we kept going up all the way to the 2017 bull market, when we hit 19,500. Can you imagine buying when it indicated that the bottom was in at around $200, and then it went all the way up to 19,500 on the 2017 bull market. And guess what? We hit another bear market after that. We went from 19,500 all the way back down to 3, almost 3K, below 4K. And look at right here, crossed again, death cross, and at around $4,000, $3,000. If you would have bought anywhere around here, guess what? Gains again. And there is that COVID crash, but where did it crash to? 4,000, the bottom. That when the COVID crash happened right here, where did it crash to? At the bottom. The bottom was in. It just retested it again. So you never was at a loss if you did that. If you accumulated when the bottom was in, when the death cross happened on the 3-day chart. That happened 3 times in the past, and then here we are now on our double top, 60 something K, and then double top at almost 70K, 67,000. And then now we're at a bear market again. And look what just happened. Cross. Right? So this is a good bottom indicator. Again, nothing is certain. There is no certainty in trading, just probabilities. And the probability of us being at bottom right now is quite high. There's a lot of indicators saying that we are bottom. It outweighs the indicators that's saying we're going to go lower. Okay? I'm just telling you the facts in the charts. This death cross happened 3 times previous in the whole lifespan of Bitcoin, and this is the 4th time it happened. And the past 3 times it happened, it indicated that the bottom was in. Now it's happening again. Guess what can happen? High probability. The bottom is in. We're gonna continue this Wyckoff accumulation pattern to 30K, and then hit after the 30K, we may correct a little bit, creating a panhandle, right? Because the Wyckoff accumulation pattern is also a cup and handle pattern. Right here, the cup and handle pattern. I'm going to draw that real fast. Cup and handle pattern are usually a bullish signal as well. Cup and handle looks like a cup with the handle. This one, we could be making a cup as well, and a handle. The handle is usually the bull flag, and then it breaks to the upside. And then we do break to the upside. We are looking at right around 40K. 40, 45K, right? That is around the price range, okay? And then we're gonna go from there, because from there, who knows if we're gonna go sideways and then go back down, and but we're gonna go from there. But if we do hit that area, there's a really good chance that we're just gonna gradually go up to the next bull run, okay? So that is what I see right now. Let me erase all of this. Let me put back there. Boom. All right. That is what I see right now. And again, if you like this content, please hit like and subscribe. And don't forget to hit the notification bell. Description down below. I am not a financial advisor. This is not financial advice. Everything I say is I'm just reading the facts of the chart. This is just for educational and informational purposes only. Again, thank you. And also, just to let you know, I am actually a professional trader for Liberium crypto. If you do not have time to trade on your own or learn how to trade, you can actually sign up. The link down below, you can sign up for a Liberium, and you can follow me, and I can execute trades for you automatically in your exchange. Link down below, information. If you want more information, just hit me up, message me on Telegram if you're in Telegram, and also just message me here on YouTube. All right. Until next time, peace.